What's up, traders? Welcome back to another episode. Today, we're gonna talk about one of the most recurring price action patterns out there. These patterns can be super useful in your trading, so pay attention. The setup is pretty straightforward. You've got this back and forth price movement that forms a nice little zigzag shape. It's kinda like the market is playing a game of tug-of-war, but eventually one side pulls ahead. Recognizing these patterns can help you time your entries and exits a lot better. Anyway, let's dive into the details and see how you can start using this in your trading. It's gonna be a good one, so stick around. The rising wedge is a nifty little chart pattern that traders love to keep an eye on. It's like a heads up that the current trend might be running out of steam and could be ready to make a U-turn. The way it shapes up, with prices climbing higher and higher, but at a slower and slower pace, it's like the market is tiring itself out and getting ready for a rest. Savvy traders will be watching this pattern closely, ready to jump ship before the trend shifts and the good times come to an end. Pretty neat stuff, if you ask me. The rising wedge is a chart pattern used in technical analysis to predict a likely bearish reversal. It is characterized by a narrowing range of price with higher highs and higher lows, both of which are enclosed by upward sloping trend lines. However, the slope of the support line is usually steeper than that of the resistance line, leading to a convergence of the two lines over time. Key characteristics of the rising wedge pattern include converging trend lines. Both the support and resistance trend lines slope upwards, but they converge as the pattern matures. Volume. A declining volume accompanying the formation often strengthens the pattern's bearish signal. Breakout. Confirmation of the pattern occurs when the price breaks below the lower support trendline, signaling a potential bearish reversal. Confirming the pattern in a safe manner happens when the trendline is broken, but I'm entering the trade on the third touch of the resistance line with the confirmation of the candlestick signals. It's always better to wait for that clear breakout rather than rushing in, you know? Gotta play it safe and let the market show us the way. Once we see that support resistance flip, that's when I know it's time to pull the trigger. Yo, listen up. When you're trying to find a pattern to trade on, it's best to look for one that's been hanging out on an order block, support, or resistance level from the past. That way, you got a better shot at getting some juicy win rates. Why no? It's like finding a sweet spot where the market's been chilling before, makes it more likely the pattern will play out the way you want. Just gotta keep your eyes peeled and find those spots on the chart, and you're golden. Easy peasy, right? Another one of the good endorsements for this setup is fake breakout, that it really boosts the credibility of the wedge. The fake breakout has received some solid validation, which helps to enter. It's just another positive stamp of approval that traders can take into account when considering the rising wedge offerings. Yo, listen up. When it comes to finance and investing, nothing is a sure thing. You feel me? Even those fancy patterns and models that traders love to use, like the rising wedge pattern, they're not bulletproof, you know? Sure, the rising wedge can be a pretty reliable indicator, but you can't just rely on that alone. Gotta have a well-rounded strategy, diversify your portfolio, and not put all your eggs in one basket. Otherwise, you might end up getting caught with your pants down. Know what I'm saying? It's all about being smart and covering your bases, my dude.